Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about General Motors Company Annual Report. General Motors Company offers a wide range of businesses and services to cater to various customer needs. The company designs, builds, and sells trucks, crossovers, cars, and automobile parts worldwide under its prominent brand names such as Buick, Cadillac, Chevrolet, GMC, Baojun, and Wuling. In addition to vehicle sales, General Motors provides software-enabled services and subscriptions, which include automotive financing, maintenance, light repairs, collision repairs, vehicle accessories, and extended service warranties. The company also offers various after-sale services through its dealer network, making it a one-stop shop for customers' automotive needs. Furthermore, General Motors sells vehicles to fleet customers, including daily rental car companies, commercial fleet customers, leasing companies, and governments. This diversification of sales channels allows the company to reach a broader customer base and increase revenue streams. Overall, General Motors Company's extensive range of businesses and services positions it as a leading player in the automotive industry. General Motors Co. stock price has skyrocketed by 73.52% over the past year due to a series of positive news events and strategic developments. The company's strong financial performance, clear forward-looking strategy, and enhanced shareholder returns have contributed to investor confidence. One key factor behind GM's success is its robust 2025 financial results and optimistic 2026 outlook. In January 2026, the company reported strong fourth-quarter profits for 2025 and projected a substantial increase in income for 2026. This announcement led to an immediate jump in the stock price, with shares climbing over 8% on the day. In addition to its financial performance, GM has also made strategic shifts towards profitable vehicle segments. The company has been actively realigning its electric vehicle (EV) capacity and investments to match evolving consumer demand and changes in U.S. government policy. This right-sizing of EV plans is seen as a strategic pivot to improve capital efficiency and near-term profitability by focusing resources on higher-margin vehicles, particularly trucks and SUVs in North America. Furthermore, GM has achieved strong sales growth across all its brands in 2025, with Cadillac and Chevrolet showing particularly robust performance. The company's better-than-expected Q3 2025 earnings and raised guidance have also contributed to the stock price surge. Additionally, GM's growth in software monetization and improved China performance have been highlighted as catalysts for growth. Overall, General Motors' combination of strong financial performance, strategic shifts towards profitable vehicle segments, and enhanced shareholder returns has led to a significant increase in its stock price over the past year. General Motors Company maintains a market capitalization of $81 billion, broadly in line with the industry peer group. General Motors Company trades at a higher price-to-earnings ratio of 26 times and a lower price-to-book ratio of 1.26 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The leverage on the balance sheet appears elevated, with liabilities of 77% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The company has aggressively reduced its share count by more than 5%, while revenue, profits, and assets have grown. This represents a very favorable capital allocation strategy, with management materially increasing per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth or decline at General Motors can be identified from the extracted summaries. On the revenue growth side, GM&A and GM Financial have been key contributors, with net sales and revenue increasing by 4.3% and 13.5%, respectively. Additionally, equity income from Ultium Cells Holdings LLC has also seen a significant increase of $499 in 2025. On the other hand, several factors have contributed to revenue decline. GMI's net sales and revenue decreased by 0.6%, while Cruise's segment expenses and other items saw a massive decrease of 99.7% due to the wind-down of robotaxi activities. Furthermore, Automotive China JV's equity income has also declined by $4,723 in 2025. Restructuring and charges have been another significant factor affecting revenue growth or decline. The company has incurred substantial costs related to supplier claims, warranty expenses, and product liability. Additionally, recall costs and class action settlements have also had a negative impact on revenue. In conclusion, the primary drivers of revenue growth at General Motors are GM&A, GM Financial, and equity income from Ultium Cells Holdings LLC. On the other hand, factors such as GMI's decline, Cruise's wind-down of robotaxi activities, and restructuring charges have contributed to revenue decline. General Motors' net income and profit margins. A declining trend. The financial performance of General Motors has been on a downward trajectory in recent years. The company's net income has decreased significantly from $10.3 billion in 2023 to $7 billion in 2024, and further declined to $3.2 billion in 2025. This decline is evident even when comparing the net income attributable to common stockholders, which increased from $7,189 million in 2024 to $3,180 million in 2025, but still represents a substantial decrease. The profit margins of General Motors have also been declining. The gross profit margin has decreased from an unknown value to another unknown value, with no comparison provided. Additionally, the operating profit margin is implied to be lower than the gross profit margin due to adjustments and eliminations. This downward trend in profit margins suggests that the company's revenue growth has not kept pace with its expenses. The reasons behind this decline are not explicitly stated in the provided information. However, it is clear that General Motors' financial performance has been deteriorating over the years, indicating a need for the company to reassess its business strategies and operations to improve its net income and profit margins. The analysis of the company's financial performance reveals a consistent trend of generating positive operating cash flow. Across multiple pages, including 39, 40, 41, 59, 78, 85, and 120, it is stated that the company is indeed producing positive operating cash flow. This consistency suggests that the company has been able to generate sufficient cash from its core operations to cover its expenses and investments. The specific figures mentioned on some pages, such as $18.7 billion in 2025 and $23.9 billion in 2024, page 40, further support this conclusion. Overall, the evidence points to a strong financial position for the company, with a consistent ability to generate positive operating cash flow over the past few years. The performance of various segments and regions within GM Financial can be analyzed based on the extracted summaries. North America emerged as a strong performer, with over 83% of cash and marketable debt securities managed within this region. This indicates a significant presence and success in the North American market for GM Financial. On the other hand, GM Financial faced challenges in certain areas. The company declared lower dividends in 2025 compared to previous years, suggesting a decrease in profitability or financial stability. Additionally, the insignificant total compensation expense related to share-based awards in 2025 raises concerns about the effectiveness of these incentives. Furthermore, the payment of $0.2 billion in cash to settle tendered Cruise Class B common shares in 2024 indicates a significant outlay that may have impacted GM Financial's financials. Management is optimistic about the company's outlook, citing significant growth in lease payments due to GM Financial on leases to retail customers. The company has a strong outlook for its electric vehicle (EV) business, with an estimated $25 billion residual value of leased assets at the end of the lease term. To align with expected consumer demand and U.S. government policy, management is investing heavily in EV capacity and manufacturing footprint. The company's strategy focuses on cost reduction and restructuring through voluntary separation programs, closing manufacturing operations, and repurchasing common stock. Management is also investing in joint ventures and non-consolidated affiliates, particularly in the EV space. Additionally, the company will continue to invest in autonomous and assisted driving technologies through combined technical efforts with Cruise. However, management highlights the challenges of complying with emissions-related regulations, which may result in significant additional costs. The uncertainty surrounding future regulatory changes also poses a risk to the company's compliance costs and overall strategy. Despite these challenges, the company is positioning itself for growth in the EV space while navigating the complexities of emissions regulations. Acquisitions and divestitures are significant business strategies that companies employ to grow or restructure their operations. In this context, General Motors has been actively involved in both acquisitions and divestitures. The company's acquisition strategy includes the purchase of non-controlling interests in Cruise in February 2025. Additionally, GM has invested in raw material suppliers and formed joint ventures with partners in various countries, including China, Korea, the US, and Canada. These moves demonstrate the company's commitment to expanding its global presence and capabilities. On the other hand, General Motors has also engaged in divestitures as part of its restructuring efforts. The sale of Opel and Vauxhall businesses and certain assets in Europe is a notable example. Furthermore, the company has wound down Cruise robotaxi operations, which began in February 2025. GMNA's strategic realignment of EV capacity may also lead to the potential divestiture or sale of certain assets. In some cases, General Motors has restructured its business through loans and settlements. For instance, it loaned $1.8 billion to Ultium Cells LLC and paid $4.7 billion in charges related to supplier commercial settlements and contract cancellation fees. The company also sold European financing subsidiaries and branches to Bank PSA Finance SA and BNP Paribas Personal Finance SA in 2017. Overall, General Motors' acquisitions and divestitures reflect the company's efforts to adapt to changing market conditions and expand its global presence while optimizing its operations for long-term success. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In the year ended December 31, 2025, the company paid out a total of $2 billion in dividends, demonstrating its commitment to rewarding investors for their loyalty. In addition to paying dividends, the company also engaged in significant share repurchases during this period. A total of approximately 104 million shares were bought back for $6 billion, representing a substantial investment in the company's own stock. This strategic move is likely aimed at increasing shareholder value and reducing the number of outstanding shares. Overall, the company's dividend payments and share buybacks demonstrate its focus on creating long-term value for shareholders. By returning capital to investors through both dividends and share repurchases, the company is able to maintain a strong relationship with its shareholders while also positioning itself for future growth and success. That concludes the financial summary for General Motors Company. Feel free to comment below, and I will be happy to answer them when possible.